Hello, hello. We are live and Thursday's update is happening number 23. You need to know this because you know why it's very common today, especially right now. Everybody's asking. I already have a house. I want to buy another one. What should I do? Should I buy as an investment property or should I buy another owner-occupied property? Can I do this? What's the difference? Why do you care anyway? I'm gonna pay it, right? I have the down payment, right? So we're gonna be talking about that. What's the main difference between buying an owner-occupied property or an investment property? And today I'm gonna be talking about next week, Thursday. I think it's June the 20. Oh, June the 24th. June the 24th next week. I'll be off. I'm not gonna be here making the live video. But if you have a question, call me, please. Besides that, well, crypto. Is it crypto sleeping? What's happening with crypto? All those news happening and stay right there. Well, I'm going right now talking about that. Thank you for joining me. I really appreciate you help and support. Please share, send the leads, call me if you need help. If you know anybody who needs a loan, let me know. Lulu, long time no see you. What else? I'm happy and blessed because today is an amazing day. Today we have great news. We finally today funded one of the transactions, first time ever on their CTCHL, Clear to Close Home Loans. We are celebrating. Thank you, Melanie. Great job. Thank you, Summer and James and the whole team. I'm really happy and pumped. Thank you very much. Okay, so let's go to the numbers. By the way, I have my own present for myself. My new shirt that I like, I love it. And you know, today, I love Thursdays, you know. Thursday, I'm waking up in the morning like a smile. It's Thursday. I have to, do my cardio. I took the kids to the summer school this morning and taking the cardio around beautiful views on the golf course. I love that. And then coming to do the video and talking to the clients, getting the loans funded on Thursdays, getting me pumped. And it's just starting of the weekend. All right, let's talk about the differences. Okay, you right now owning a home, right? And you want to buy another one. Or you're a first-time buyer and you don't know what to do. You want to buy a property, you want to buy a piece of real estate, but you're not quite sure if you should move to there because probably you're living with your mom. Or maybe you're living in a place where the rent is super cheap, but you still want to buy. You own investment, you own property. What should I do now? Who cares? I have good credit, I have income, I have my job, and I have the money for down payment. Why do we have to choose? Well, first, because it's simple. You need to know where you're going to be living at. Second, because the programs are totally different. If you're buying an owner-occupied property or you're buying an investment property, you're going to say, why? It's a loan anyway. 30 years, right? Well, because the investors, the money, the funds are coming from different sources. And not all the sources want to have the same return, and not all the sources are made with the same purpose. So it's not the same getting an FHA loan or VA loan or USDA loan. Also, 3 loans are government-sponsored loans. They are not only to make money as a business, they are there to help and support people who really need it, or especially first-time buyers. On the other hand, the traditional conventional loans on investment programs or non-QM are made only uniquely to make money, profit. It doesn't matter if you are just looking for help or not. So let's go to the point. Pretty much, you have 4 programs that you can use when you're going to be buying owner-occupied. Just simple, right? FHA is for first-time buyers, sponsored government loan, stands for Federal Housing Authority. VA for veterans. USDA is the agricultural loan. And the conventional traditional loan owner-occupied. By the way, let me put here some notes on the video for YouTube. First, remember you are on Thursday's update, number 23. And today we are talking about the difference between owner-occupied versus a rental when you're going to buy a property. And next Thursday, I'm not going to be here. Just in case you don't see the video, you wonder what happened with Carlos. He's very consistent every Thursday. Why he's not here today? Well, next Thursday, I'm having a day off. I'm going to enjoy next Thursday. I have something great to do that I never done. Well, I have probably done it before, but not the way I'm going to do it. I'm gonna be driving in a different place. And today we're gonna be talking about crypto, okay? So you know that already. I'm very happy that you're here and I really appreciate your support, especially if you have subscribed to the YouTube channel Carlos Lopez Mortgage Show. That helped me out a lot, okay? So now let's go back to the differences between owner-occupied and investment property. Like I was saying, the program is the most important thing at the beginning. And based on the program, you're gonna see the difference. Like for example, interest rate, simple. Interest rate, an owner-occupied regular loan, either FHA or conventional, USDA or VA, all those loans, all those programs, the rates are very similar. Like especially today, right now, if you have good FICO score over 660, 640, you can buy with any of those programs. Your rate is going to be around 2.875, 3.125, right there. A quarter point different, higher or less, depending on the loan amount and the down payment and the FICO score. But that would be your rate today, right now. No extra cost for the rate, by the way. Yes, we have one of the lowest rates in the market. If you've been to your lender and your lender gave you 3.5, 3.75 rate, well, that's the rate that they have. It doesn't mean you need to get it. That's the reason why you need to go shopping around, or you just need to talk to me and I do the shop around for you. Remember, I'm a mortgage lender, I'm a direct lender with DC Fundings, and I'm a broker lender with Clear to Close Home Loans. And I can do that for you, okay? I can get the best deal for you. That's what I do. That's the reason I've been here doing this for a long time, and I'm happy to do it. Okay, so now you know the difference on the loans and the rates for owner-occupied. So if you go investment, is it gonna change that much? Well, the difference usually is on a traditional financing loan, like conventional for investment property, it's gonna be half point higher on the rate. So if I was saying 2.875, 3.125, your rate for owner-occupied, either FHA or conventional or USDA or VA, then for investment property, your rate is gonna be around 3.5%. And actually, yesterday, I quoted a 3.5% rate, 30-year fix for an investment property. Cash out, by the way, refi cash out. But that is for regular, traditional, conventional. If you for any reason cannot go traditional, conventional, because your income, your taxes doesn't help you, you're a self-employed, you just do all the write-off. Remember, we have a program called non-QMs, and we can go either with bank statements or we can go use with the rental income of the property. I talked about the rental income program last week, and I talked about the bank statement programs 2 weeks ago. If you need questions or you have questions about those programs, let me know. Anyway, with the bank statement programs or the rental income property program, that we only use the rental income on the property to qualify, the rates are usually around 4.5% or 5%, depending on the FICO score again and the loan amount. So, of course, those programs are unique. It's not for everybody. It's just for investors who doesn't qualify with the regular traditional way. So now you know the difference between the programs, the rate. And now let's talk about the fees. When you go owner-occupied, you regularly just have traditional normal fees. Title, escrow, notary, appraisal, the processing and underwriting fee from the lender. The processing fee on the writing fee from the lender can go from $1,200 to $2,000. So the whole enchilada, like people say here in California, your whole closing cost for a regular traditional owner-occupied property would be around 3% of the purchase price. Kind of, maybe less, depending on the lender, of course. If you go investment property, the investment property changes the fees because all the investment properties, all the investment programs have extra fees for the lender because of the rates and the discount points and the program itself. So your closing cost for those kind of properties will be probably around 4 to 5% average. So yes, it's a little more pricier if you buy an investment property than buying owner-occupied. But you're an investor, so you should know better. And you're gonna make money off it. So who cares? At the end of the day, you do the numbers and you see what's the best thing for you. So if you ask me my opinion, if you never bought a house, you're gonna buy a house the first time, buy owner-occupied. If you don't know you're gonna live there at least for 12 months. That's what we need minimum when you do owner-occupied. If you don't like it 12 months, just rent it out and move to your parents' house again. That's it. But that's it. This is pretty much my opinion. Now you know the rate, the fees, the programs. And both close at the same time, 30 days. If you have more questions, let me know. You already know next Thursday I'll be off. I won't be here. I'm going to be having some special with family time and friends. And now let's talk about crypto. Crypto is going to be quick because there are a lot of news, a lot of things happening. Bitcoin is getting improved. Bitcoin is going back to Tesla again. Elon Musk is saying he has Bitcoin. He's going to be doing more stuff. Dogecoin is going down. but crypto, it will come back. It cycles. That's it, guys. I love you. Bye bye. Take care.